Good afternoon. This is Sean Golding with Golding and Golding. As we enter another tax season, many Americans do not want to pay tax if they don't have to, which is common thought. The question becomes, can you really just go overseas, buy an offshore plan B, or otherwise just leave the US and escape US taxes? Typically, no, despite what you might read or hear online. So let's go through some of the basics. Right? What's the common example we deal with here? An entrepreneur, someone who built their business up from the ground up, and now they're making good money, and now they have to pay a lot of tax. And unlike other countries, the US doesn't offer great entrepreneur benefits. Some countries offer tax incentives or better tax incentives for entrepreneurs. But unfortunately, a lot of people will go from not making money to becoming successful and then paying a whole bunch of tax and then realizing maybe they made some mistakes along the way, or they should have been filing, or maybe their expenses don't add up. And for a lot of people, the first thought is to leave the U.S. Right? It's an understandable thought. For other people, they might have money overseas, whether they're an entrepreneur or not, and they haven't been filing taxes or they haven't been reporting their foreign income. Uh, they haven't been filing FBAR or FATCA to report their foreign accounts, assets, and investments. And so the question becomes, is going offshore the right move? For some people, going offshore or leaving the U.S. is the right move. Typically, this is going to be you came to the U.S. and you overstayed beyond what you thought you were going to, or you're a dual citizen by birth, lineage, and you have family in another country. You're older, you're retiring, your family's now overseas. There's no need to be living in the U.S., having U.S. status, and paying tax on your worldwide income. That's a good reason. Some people they don't want to pay tax, and so they start researching online, one rabbit hole after the next, and next thing you know, you're seeing these glossy materials about how you buy a couple golden visas and you just go overseas and no one in the U.S. bothers you. The IRS can't find you. You're in country X, your assets are in country Y, and now you're not paying any tax. Is that reality? Typically, it's not. And let's go into why that is. As a U.S. person, I'm focused on Americans, but it also includes, lawful permanent residents who haven't made treaty elections. Possible other people who met the substantial precedents, but primarily you're a U.S. person for tax purposes because you're an American, you're living overseas. Let's say you go overseas, right? The U.S. taxes you on your worldwide income. So even if you live in a foreign country and all of your income is sourced in that foreign country, you're still going to be taxed by the U.S. government. You may have foreign tax credits in the foreign earned income exclusion, but typically, if you're going to some of these countries where are considered offshore haven type countries, then you're not going to be paying any taxes there, so you're not going to have any foreign tax credits. In fact, you may have additional taxes we'll get into in fees and things like that. But even in so alternatively, you may be living overseas and thinking, well, the IRS isn't going to find me, they're not going to do anything, but that's not true. The IRS, the US government, has entered into several agreements with foreign countries, mutual collection agreements, bilateral treaties, FATCA agreements where more than 110 foreign countries and hundreds of thousands of foreign financial institutions, and some you would never think, actively report U.S. Persons to the U.S. government so that the IRS and other government agencies know about your foreign accounts, they know about your foreign income, and then if you start filing returns and not reporting this, you're getting yourself into a bigger issue because that could be a potential tax fraud, tax evasion. In addition, a lot of these countries, especially the ones that offer citizenship by investment, residence by investment as well, but more citizen by investment is where a lot of this happens. You have things such as like wealth taxes because now you're a citizen of that country. There's corporate tax licensing fees that nobody told you about when you decided to form your offshore company to do your consulting. There's a lack of transparency a lot of the times. The companies selling the golden visas may not tell you everything. Once you get the citizenship, you don't realize till you're there and you're trying to create your foreign company, your offshore asset protection trust, all that kind of stuff, that the fees are way higher than you thought. And unless you formally expatriate, you're still going to be subject to U.S. tax, and the U.S. government could probably still find you overseas. Let's separate fact from fiction for a moment, okay? Because a lot of times people act on the fear of something happening and they think that they're going to alleviate this fear by going overseas, but oftentimes it just unfortunately it just doesn't work that way. We know this because then people reach out to us saying they want to come back, they want to fix it. for many people, what will happen is they realize after a certain amount of time that they haven't been filing taxes for many years. At first, they thought nothing would happen, and maybe nothing has happened, or they've gotten married, they're having kids, and now they're more worried about it. They may have foreign accounts and assets they haven't reported. Now they're worried about it because now there's more agreements and there's more enforcement. Just going overseas isn't necessarily going to help because, as we mentioned before, the IRS has its way of getting the money and assets that you have overseas, collecting on the assets you keep in the U.S. If you do, they could eliminate your ability to travel if you're still traveling on a U.S. passport. There's a lot of things that they can do. So just going overseas doesn't mean you're going to be able to escape U.S. tax. You may think, oh, I want to move my company overseas and then I won't have to pay any tax. But the problem is, if you're still a U.S., if you're not a U.S. person, there's certain corporate inversion limitations, and so the IRS still is going to try to get their money if you try to dissolve your U.S. company here and then reform it overseas. If you're still a U.S. person, then you're going to have issues such as GILTI, which is the Global Intangible Low Tax Income, Subpart F income, and potential PFIC issues depending on whether it's a holding company and whether it owns certain types of foreign investments. Sometimes people will move overseas because they think they can get away from U.S. taxes and then invest in certain tax promotions that they offer zero tax liability. There's not going to be any reporting. You're going to have a numbered or an anonymous account. But first, these are high risk. There's potential criminal implications. And even like with the Swiss bank account situation, back in the early 2000s, people opened numbered accounts thinking that the IRS is never going to find them. But guess what? Many of these foreign financial institutions in Switzerland entered into deferred prosecution agreements with the U.S. and forwarded all this information, which is how the OVDP had come about. So it's important to look into the future as well, determine whether really it's something that you want to do and whether you think you're really going to escape taxes by doing it. Maybe you will, but oftentimes you might get stuck in the matrix, right? So a few things to keep in mind. One, if you haven't done anything yet, then you want to try to plan before forming a plan B. Create your plan A, try to maximize your plan A so that you don't need the plan B, because most of the time people buy these plan Bs and they don't need them. It's a plan B for a reason, but investing hundreds of thousands of dollars, even millions of dollars into a plan B, what you could be doing is increasing your exposure to the U.S. government by having to report all of the foreign accounts and assets and investments you have. We have a prior presentation we did a few days ago that goes into that, but something to consider, okay? And then if you're out of compliance already and you're nervous and you're thinking you want to run, again, very common, but what oftentimes you could do is you do one of the offshore disclosure programs and get yourself back into compliance. Depending on whether you're willful or non-willful, there's various different programs available. We have a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.